Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday. We're back. I know you probably missed us. Hope you had a great Thanksgiving holiday. We're able to spend time with the people you care about. And, well, let's face it, Thanksgiving is really all about one of my favorite things to do, eat. Let's just put it this way. I eat a lot, and my wife has declared that starting today, she let me go through the whole weekend, but starting today, all the way until Christmas, I'm going to have to eat healthy, which kind of sucks. So if I'm a little crabby until then, it's not that I don't have the Christmas spirit. It's just that my wife is going to make me eat stuff that's actually good for me. So I always hate that. Our toll-free number, 800-951-0592. Of course, the website at allamericangold.com. And don't forget, follow us on YouTube and on Rumble. Subscribe to our page. Like us. Give us the thumbs up. That lets the word get out. We get enough thumbs up, they start sharing it all over the place. Just go out there and just search Patriot Trading. You'll see us. We'll come right up. Patriot Trading Group. We'll come right up for you there on YouTube and Rumble. It is Monday, so we've got my son Joey with us. Of course, Joey from Northwestern Mutual. Why? Well, because he's a pretty smart guy. Hey, I don't want to be involved with banks. I don't want to be beholden to Wall Street and the pinstripe bandits. Yeah, most people don't know this because Northwestern Mutuals are huge, right? Everyone's heard of them. And they think, well, yeah, they sell insurance. They do a lot more than just sell insurance. But they're one of the places that, they didn't need any bailouts, right? They didn't have to become a bank to get money and all these things. They've got a AAA rated credit rating, things that actually matter to a lot of people. I know our listening audience, if we don't have to deal with banks, the better. And over the holiday, we were off once again. More depositors leaving the banks, Joey. More emergency lending, another record in emergency lending to pretend that all these banks are solvent. But everybody's excited about the fact that they say the Fed's done raising rates, and you hear everybody on TV talking about the Fed needs to start cutting rates. The Fed's going to cut rates, and Wall Street's going to rally because the Fed is going to cut rates early. But this is why you're telling people, listen, this is why you want to have Joey in your corner. You got a 401k, you got IRAs, you want him to handle it because, number one, I don't think so, because normally the Fed's history is they wait too long to do anything. So the chances are they're going to be late to the party and cutting rates. But if they're not, if they're early, either way, Joey, if they got you in your corner, you're going to adjust immediately to what's going to be happening real time.
Yeah, with all the smoke screens and the Fed of cutting rates and looming over our heads, they've been supposed to cut rates for a year now. We got to make sure that we're staying flexible with everything. And when they do pull the trigger, that we've already got a plan in place to get it done. But I want to touch on something in Thanksgiving and the holiday season and spending time with friends and family. For me, I love going back home to Arizona, hang out with Dad, Mom, brother, and all my friends from high school. It's a great time, but it was a great time for me to sit down and reflect on why I do what I do and the value proposition we bring to these friends and to family members. And, we need to make sure that our family's protected now more than ever. With everything that is going on in our world, all the smoke screens that we're looking at, the reason we do financial planning is to make sure that our kids are taken care of, that our loved ones are taken care of, and so that we can continue to live the life that we deserve to have without having to worry about the financial problems in all of our lives. And it's a problem in 90% of the average American citizen. And we want to make sure that we're planning around these families and that they're not leaving or entering retirement behind. And with the new year coming up, it's a great time for us to get a plan in place and a game plan going into 2024. And if this is something you've been thinking about, your financial plan, or you're thinking about tax season, you're thinking about your 401ks, you're thinking about buying a new property or funding for a kid's education, we need to have a conversation and get a game plan going into 2024 before the year ends so that we can all feel good knowing exactly where we're at and what we need to get done to get from A to B.
You know, it's so funny you're bringing up some of this stuff, and one of the things that I wanted to talk about, you know, the Inflation Reduction Act, which I can't even believe that people even allowed for them to try to call this. Anytime the government spends money it does not reduce inflation. It actually increases inflation. But one of the things in there, Joey, was they put in caps on how much you could pay for prescription drugs for seniors. Well, all of a sudden now, they're expecting huge increases in health care premiums because of the quote-unquote Inflation Reduction Act. Another one of these reasons why you got to have someone like Joey in your corner to handle these things. We'll be right back. Eight 800-951-0592. Joe and Jason, we got Joey with us, and you know he's just talking about you got to have this plan in place. What you do, you have to. You have to. Just think about when it comes to health care now. Just as early as July, they said, health care premiums are going to go down, the Inflation Reduction Act. Well, apparently nobody told the insurers because they said, no. Medicare Part D, depending on where you live, $269 higher if you live in Texas. If you live like in New York or California, $500 higher. But, Joey, these are things. Tudor Jones over the weekend, the billionaire. Plenty of room to raise taxes. All of these things continuing. It just seems like it doesn't matter what type of legislation the government passes. We always seem to end up in the same place, which is the vast majority of Americans got to pay a whole lot more just to get the same thing they were getting previous.
Yeah, it's crazy how the cost of living has increased, and along with it, so has healthcare. And that's one of the things that we're helping our clients with, mainly in retirement. When you go on Medicare, how do we make sure you've got money set aside to pay those bills? And if something does happen to your health, a long-term care event where you need assisted living, that you've got a bucket of money set aside to pay for things like that. So the harsh reality is if we ever go in assisted living or a nurse comes to our house a couple of days of the week, that's going to cost you on average $8,000 a month. Usually more expensive depending on where you're at and how much care you're getting. And along with that, we got to make sure you don't deplete everything you've built up just for that 1 year long-term care event. And with the healthcare situation, there's really two expenses that you're going to have throughout your life that's really could derail your plan. That's healthcare costs and taxes. How do we mitigate those costs? How do we make sure that you're taken care of there so you can just go out there and live your life and enjoy your retirement, knowing someone is always looking at it for you, and you've got a face to talk to 3-4 times out of the year to make sure your plan is doing what it needs to do. And these are all big conversations we need to have before we retire, before we walk away. When do we collect Social Security? What makes the most sense there? And I know we can get really busy coming this holiday season, but there's no better time to plan than today. We know what's going on. You know how your year is going to end income-wise. Let's get a game plan for tax season and make sure we're getting Uncle Sam that smallest slice of the pie possible, as we always intend to do with our clients.
Yeah, because it looks like, let's face it, right? Every time you turn around, whatever you can get saved in paying Uncle Sam in one pocket, they're going to be out there in this other pocket saying, well, give it here. I mean, if you know, how nice would it be to be able to talk to Joey, get a plan together, and save a bunch of money on your taxes, and then all of a sudden, hey, okay, yeah, Medicare Part D just went up $500. It doesn't matter. I've got that because Joey saved me that money. I can afford to do that. Or, hey, you know what? He's got me in such a better spot. I can look into some long-term care. I mean, nobody plans on having a stroke, but you know what? How many people out there? I know all of us probably can raise our hands where we know people that have needed, whether it's nursing coming to the house or, heaven forbid, they have to go in these assisted living facilities. These things just aren't cheap, and Joey, they just get more expensive.
They get more expensive year over year, and the older we get, it gets more expensive as well. That's just the double-edged side of it. But we have to make sure, if we truly love our family, our kids, we want to leave something behind. We want to make sure the tax situation's figured out. And all of these things are stuff that we're helping all of our clients with. And we may have an open door policy. But we're always meeting. You call us up, we'll get something on the calendar. But we're meeting 3-4 times a year to make sure that we're, one, educating you on all of the changes that's come up through legislation. But two, things are going to change in your life. You're going to want to do different things. You're going to end up having different goals as you mature and grow. We got to make sure we're able to set aside money for that as well. And oftentimes people are mistaking and thinking, if I go to a planner, they're just going to tell me I have to save more. A lot of what we do is restructure how people save and just do it more efficiently. A lot of our clients end up saving 3% year over year on taxes after implementing a plan with us that makes them more tax efficient. And I know things can get busy during the holidays. You got vacations. You got all the sports for kids. Basketball season's coming up. But you're going to feel so much better coming into January knowing, hey, I have to do X, Y, and Z. We've got this figured out. And that way, when we hit the new year, we're entering it stress-free, which is pretty hard to do, especially in times like these.
Joey, how do they get a hold of you?
You can just reach me at my personal cell, which is 602-909-9048. Again, that is 602-909-9048. If I don't answer, for whatever reason, just leave me a text or a voicemail, and I'll get back to you as soon as possible. But as always, it's a pleasure to come on the show and chat with you guys every Monday. I hope everyone had a great Thanksgiving with friends and family, and look forward to coming on next week.
Yeah, and just think about this. The average person, when they switch over to Joey at Northwestern Mutual, they have 3% savings on taxes. Right out the chute, 3%. Now, here's the thing. Multiply that every single year. If you're 60 and you live to 85, and he's going to save you 3% a year for the next 25 years, that's a big chunk of money. Make sure you reach out, 602-909-9048. I've already done it, obviously, but the thing about it is, Jason, this is free money. This is free money. Like Joey said, a lot of people think, oh, they call me up and they're going to tell me I just got to save more. A lot of times it's amazing what they can do by moving around some buckets and actually end up to where, hey, here's an extra 3% we just found you.
Yeah, 3% is, if you're talking $1 million, and if you're talking 3% a year, that's $30,000 a year. That's a part-time income for some people, and for the poverty level, that's a full-time income. Off of that kind of savings, Joe.
You think, you laugh, but you think about what Jason was just saying. when you look at, because obviously Joey's talking about Texas, but when you look at the income levels that are coming out from the tax seasons, and Jason, it's incredible. You're talking about $40,000. Okay, that's not a lot of money. Half of all American workers made less than that. Half of all workers made less than that. And like Jason was saying, hey, you got $1 million. Hey, Joey's going to have you save you in taxes about what half of the people in the United States make. I mean, it's insane to think about it.
That's right. It's why you got to take the boring topic of economics and money, and you got to put yourself square into that and learn as much as you can. It's why most of the people that are listening to this show, earnings is one thing, and sometimes you get tapped out. It gets hard to earn more. You're already working 3 jobs, or you got the full-time overtime job, and you're like, I'm tapped out. I can only earn so much more per year unless I completely change my vocation. And so you start looking at all the other things economically that can help you out. And there's so many different things you can do. The first thing, Joe, that I think people turn to is, well, saving money, because I can't keep earning and doing as well as I am. If you're fortunate enough to keep paying the bills and save a little bit, if you don't have enough saved up, it takes one emergency, and you are shell-shocked. You are messed up. There's nothing like not having that savings, but you have good credit. You've got a bunch of money saved up, or you got a good type of earnings coming in, but you don't have anything saved up, so you have that emergency, and what do? You go into debt. So not only are you paying for the emergency, you're paying the interest on the emergency. Well, this is why savings is good to have, because, I see the gold and silver customers, Joe, they're coming in, they're selling gold and silver to us. And they always have this look of guilt. And I always tell them, there is no guilt here. This is exactly what you did this for. You don't have to pay into a credit card or go into a home equity line of credit, start paying interest on this thing that you have to pay for, no matter what the emergency or minor emergency is. And with Joey, he's going to take you further than the savings part. He's going to take you into some investing, safe investing, future investing. So it's you just... Nobody was an expert at walking until you got up on 2 feet and started walking, right, Joe? It's just the way it is. You got to start somewhere.
Yeah, absolutely. You bring up such a great point when it comes to gold and silver, and we've seen it. Why are we able to tell? One of the reasons why we're so fast to know, yep, things are slowing down, because we see it within our own customer base. When people have to sell. But Jason makes such a great point. How much better is it? Hey, you know what? I have this expense, and maybe it's $2,000, $3,000, $4,000, whatever it may be. Instead of putting it on these, think about these credit cards. Even your quote unquote good credit. I got 800 credit score. Yeah, that's 23% interest. Right? Heaven forbid, my credit's not horrible, but it's a little banged up. Yeah, okay, 30% interest, right? I mean, it's just such a better alternative to it. But that's why, like Jason said, this is what it's for. It really, truly is. Yes, obviously you're making an investment, but it's also savings, Jason, and a different kind of savings where a lot of people, no matter how disciplined they are, if it's in their bank account, they just spend it, right? And they spend it on stuff they don't necessarily need. Putting it into gold and silver seems to allow people to hold on to that savings for a lot longer.
Correct. I mean, I like property. Property is a good way to save money, but property comes up with a whole other set of problems. But let's say you own 4 properties, and then that big emergency happens. That's great. You sell one of your 4 properties, and you move on, and that's great. Savings can be anything. The thing that I don't like about saving in property versus if you can save in gold and silver is that yearly tax bill that you get, which seems to get higher every year. And then all the maintenance, which you're renting the property out, making a few bucks, that's cool. But the water heater breaks, during the furnace breaks during the winter, the air conditioner breaks during the summer. And, unless you have a property management company that you trust, that's another thing. Property management companies are great, but got to be able to trust the one you've got and make sure they're doing the job right. Just a lot more to think about. With gold, yeah, there is one thing that people that buy gold have to worry about. They worry about where they're going to hide it or where they're going to keep it where it's safe and private. But other than that, you don't think about it. You don't think about the water heater breaking, right, Joe? You don't worry about the tax bill going up 15 or 20% or this year 30 or 40% in here and across the country. So it's a great way to always have assets around you, and gold and silver is just an easy one because as the price and the printing go up and up and up over time, your gold and silver prices will keep the pace, Joe, of what that inflation is trying to do to you with that paper stack of money or that digital number you've got in your account.
Yeah, and again, here's the other thing about I love property too, love it. But when you got an emergency, you're not selling that property tomorrow. That's not how it works, right? I mean, it takes time, right? Hey, you're not going to see money for, 60 days if you're lucky, right? And if you're unlucky, it can be months. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Monday. And, man, over the week, let's look here. We got gold up 2010 right now. Silver's now approaching $25. Don't be surprised, right? We've been waiting on silver. The Dow is down 80. The S&P's down. The Nasdaq's down, not a ton. The 10-year note at 444. Crude oil's unchanged here. Crypto, which has had a great run, it's off about $600-700 right now, 36,000. But we've got a lot of things happening, and we talk about being diversified. We talk about, hey, having that IRA, that 401k at Joey's just makes sense. Yeah, I want to save 3%. And some of you, listen, if the average is 3%, that means some people are going to save even more than that. That's just free money. How about why refi? I don't know what Wall Street's going to do. Think about it. This is, Jason and I were talking about it this morning. There's two ways this thing goes down. Number one, which is, I'll just say this is what I'm leaning to. Doesn't mean it's going to happen this way, but this is where I'm leaning. The economy is slowed. If you were out there this weekend, you saw it. Yeah, I know online sales was up, yeah, but online sales is nice. But it gets done still. We're not there yet. It still gets done at the stores, and people weren't there, period. How do I know? Because I was there. Saw it with my own two eyes. Either the Fed, we're going into recession, and the Fed will cut rates, but it'll be after the fact. Right? And this is kind of what Wall Street isn't prepared for, right? This will put, in other words, a lot of pressure on Wall Street, and then the Fed will cut rates after people start losing their jobs. That's scenario number one. Scenario number two, and this is what all the Wall Streeters want. They want the Fed to start cutting very early in 2024. In other words, before we officially say we're in recession, before everybody and their mother loses their job and essentially reinflates inflation again. I mean, can you imagine? Can you imagine? And I'm not talking about they cut rates a quarter point. That's not what I'm talking about. I'm talking about, hey, all of a sudden the Fed's funds rate's 3% or 2%. Right? And all of a sudden that mortgage, that's 7.5% and 8% is now back to 5%. Right? I mean, and reinflate the bubble, if you will. get inflation roaring again, get another one more big Wall Street rally. But here's the thing that I love the best. In both of those scenarios, gold and silver are going to do really well. Believe it or not, I want in scenario number 2, that's when I think Jason will do the best, right? I think in scenario number 2, where they just say, screw it, we're just going to start cutting and we're going to cut right now, you're going to see gold, I think, 3,000 plus. I think we'll start talking about silver at all-time record highs, all of these things. But, again, I don't know which one it's going to be. If it's scenario number 1, man, you're going to have another one of those years where your stocks are down 10, 20, 30%. This is why we talk about why refi. Hey, you get locked in at 10 and a quarter for the next 5 years. I mean, fixed rates of return, that's a hell of a good choice. Because I think now we're kind of in these, well, you may have a good year this year, but then next year's going to be bad. Well, maybe a better year the following year, but the next year's going to be worse, right? These types of scenarios. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YREFI24. Jason, we did get new home sales today. A little bit of a shocker here because this has been the strong part of the housing market. New home sales fell. It fell pretty hard. Fell 5.6% month over month. And the thing about this was an October number. The thing about that made it worse is they went to September, which was a huge jump. They said, well, it wasn't 12.3, it was only 8.6. So really, from the reporting of September to October, new home sales down 9%. Here's the good news, though, because, it's not all bad. The median price for a home, $409,300 for a new home. By the way, that's down 17% year over year. Unfortunately, the average price, $487,000. I don't mean to laugh. That's just a lot of money. But at least that median price has come down. And this is before the interest rates really started falling. So I'm hoping, Jason, that next month will be better. But this was a really not a good month for new home sales.
No, it's going to be hard for home sales to be strong with the interest rates high and the prices high. Just everything you just said. I've noticed that the times in Colorado, times to sell homes is getting like 60 to 90 days. Just a year and a half, 2 years ago, it was like 3 days, 2 days. You'd sell a house. Remember, Joe? You just sell your house in 2 days a couple years ago. Now it's 60 days, 90 days, moving to 120 days. And it's just it's a lack of qualifying buyers. I think there's plenty of buyers for homes. There's nothing different about the population drastically than there was a couple years ago. But they just can't afford it. They can't afford it. Plus those that would sell an existing home and move into a new build or another existing home, that's slowed down also. So that makes it slower. So, and Joe, I'm looking at an inflation chart. I saw this over the weekend, and it's a line chart, and it's showing 1966 to 1983 inflation. And then it has a line that's 2013 to present. It's exactly the same. It's not even just close. It's slightly lower, but remember they changed the way they compute inflation.
Right.
So if you would have just left the way they compute it the same, and basically where we're at now, from the 2013 to present, we're at 1976, 1977 is 5 or 6 more years, and the inflation goes way higher on the last hill there, Joe.
Well, I'm going to tell you what. What's China doing in the gold market? And I'm not talking about the Chinese central bank. That's coming up next. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Monday as we are in the holiday season here. We're heating things up. $20 Liberties. And these are the older 1866 to 1907. Think about this. This was when our money was backed by gold. And do you know that there was no inflation to speak of from 1866 to 1907? I mean, a bump here, a bump there, but really there wasn't any. Matter of fact, when our currency was backed by gold, really the only times of inflation was war. But guess what? Inflation did something that most people would consider miraculous. After the wars were over, the prices went back to what they used to be. Wouldn't that be great? Right? Wouldn't that be wonderful? Think about, I can tell you right now, I just told you on a new home, the average price, $487,000. My wife and I in 2000, we bought an average home, the average price. We lived out, and at the time, we moved. For those in Phoenix, you can relate to this. We moved to Anthem, which was way out there at the time. The I-17 was 2 lanes. There'd be traffic jams galore. But we moved way out there. We bought a 1,600 square foot, 3-bedroom, 2-bath on a postage stamp. Right? I mean, the lot was minute. It was $135,000. It's now $487,000, and that's down. And oh, by the way, it's never going back. Right? It's never going back to the $187,000. Never. And this is kind of the big problem with gold. That wasn't the case. Yes, there were times there was inflation. And like I said, almost all of it was war. But the second the war ended, whatever, steel was inflated, whatever the items that were, they went right back to where they used to be. $20 bought you a cow in 1866, in 1876, in 1886, 1896, and 1907. You know when it stopped buying a cow? 1933. That's when it stopped buying a cow. You know when it really took off? 1971, when they took us off the gold standard. But today, and this is just because we're in the holiday spirit, gold's up again. Up another $7 here at 2010. I'm going to take the price down to where it was, like, I don't know, $60, $70 ago. $2,195 for a $20 Liberty today at 800-951-0592. I'm going to put a limit of 20 per order because I want to have enough for everybody that wants to jump in here at 800-951-0592. Now, something happened during the holiday. Isn't it interesting? You had to look for it. Remember a couple of weeks ago, Jason and I were talking about it appeared that China was pulling gold from the COMEX instead of the Shanghai exchange. And one of the reasons why is because China's central bank is buying so much of the gold at the Shanghai exchange, premiums are high there. So they're going into New York and essentially putting the COMEX to the test here. Over the weekend, China added another 17 and a half metric tons. This is not the central bank. You know, Jason and I, every month we tell you they bought 23, 25, 30 metric. This is independent of that. These are traders in China, 17 and a half metric tons, not in a month, in a week. This tells you what they are doing here. This is, you know, right now in the bankers, J.P. Morgan, right? They want to pretend, no, don't worry about gold. Gold's getting tired here. Jason, gold doesn't look tired at all. Doesn't matter of fact. Goldfix is speculating that China is starting to put the squeeze on the paper gold in U.S. dollars and starting to want to deliberately drive the gold price higher to signify weakness in the dollar. But I'll say this. I think it's both. I think it's some of that, right? China wants their seat at the table. And the best way to do that is to have gold roaring, which signifies a weak dollar. But then on the other hand, too, China's got their problems too, right, Jason? Their property, you know, China's bailing out their property markets almost on a monthly basis. There's a lot of reasons for globally for people to be buying gold right now.
Yeah, one of China's big banks is getting ready to fold, isn't it? You know, one of their big banks is folding.
One of their private, non-public banks. They do a lot of real estate lending. Yeah, they're either going to go under or, well, you know, the Chinese government, who already owns them, will own them again, I guess. I don't know. But, yeah, huge amounts of gold pouring out of the COMEX. Patriot Radio News Hour. We'll be back right after the break. $800-951-0592. Gold's up 9, 2012. Silver up 40 cents, 24.75. $20 gold pieces. Limit 20 at $2,195 at 800-951-0592. Now, what is China up to? Now, we all know about the closing of the gold window in 1971. But what most people don't know about was they called it the Jamaica Accord. Why? Because they were in Jamaica. They probably don't go to Jamaica anymore. Jamaica's got its own problems. But that was really the IMF. The official gold price was abolished in 1976. The IMF sold off a third of its gold. That's when the strategic or special drawing rights were to become the more important reserve asset. And, of course, the IMF was given the power to maintain surveillance of global exchange rate behaviors and report on it. You know, we know what this is all about, right? The one world government and all this other stuff. They wanted super control. But this is the primary. Remember Ron Paul with Ben Bernanke when he asked him, is gold money? It's the Jamaica Accord that allowed for Bernanke to say, well, no, it's not in the eyes of central bankers. Right? We got rid of that, right? It's special drawing rights or strategic drawing rights. That's the money. It appears that China is now challenging this very fact. This is what it looks like, and what they're doing, at least what it looks like they're doing, is they're going after the paper gold markets in New York and in London and exerting control that's overwhelming the markets. Like right now, let's face it, right? You would think gold would, okay, it should be falling now. It's not. Matter of fact, gold here above 2010. That's new highs since the Israel invasion. The high of the year, 2030, when the banks, right, we had the financial little mini bank crash there. Jason, that's next on the list. And then, of course, we're in earshot right here of all-time record highs.
Yeah, and if China's going after New York and London gold, makes me think that a lot of the easy gold is just gone. Doesn't it? Doesn't it make you just think all the easy gold is gone? So, all right, let's go into the COMEX. Let's try to pull teeth out of that place and try to move the prices. But if the easy gold is so-called gone, Joe, then they're going to have to go after whatever gold's available. That's usually when the price starts to go up. You know, if the COMEX starts to have delivery issues, the price is going to go crazy.
Yeah, and again, everyone's been speculating how much gold does China really own, and everybody agrees it's way more than does China feel like maybe, hey, we've gotten to a number now that we can start doing this? By the way, horrible auction this morning, and this was a 2-year auction. These are the good auctions. The least amount of foreign buyers going back to March of this year. I guess foreign buyers are like, yeah, no, you think you want us to pay less than 5%? Forget it. We just won't buy. Well, probably why